In this video, we're going to talk about synergies to prevent dilution for the M&A transactions. Synergy is the concept that the combined value and performance of two companies will be greater than the sum of the separate individual parts. Synergy is a term that is most commonly used in the context of mergers and acquisitions. Two businesses can form one company that is capable of producing more revenue than either could have been able to independently, or to create one company that is able to eliminate or streamline redundant processes, resulting in significant cost reduction. If two companies can merge to create greater efficiency or scale, the result is what is sometimes referred to as a synergy merge. The expected synergy achieved through a merger can be attributed to various factors, such as increased revenues, combined talent and technology, and cost reduction. Here's synergies to prevent dilution calculation. First, you would need to calculate the earnings per share shortfall by subtracting pro forma EPS from acquired EPS. Then you need to calculate net income shortfall by multiplying EPS shortfall by pro forma shares. And then calculate pre-tax synergies necessary by taking net income shortfall and dividing it by 1 minus target marginal tax rate. Or a shorter formula for synergies to prevent dilution calculation would be max formula in Excel that is listed here. Let's go ahead and see an example of synergies to prevent dilution calculation in the spreadsheet. In the previous video, we looked into the Space Incorporation and Galaxy Corporation merger to calculate EPS accretion or dilution, and we found out that it would be a dilutive deal in this case scenario. So now let's calculate pre-tax synergies to achieve EPS neutrality using the formulas we just discussed. So my pro forma EPS is in the cell B27. I'm going to grab that. My acquired EPS I can find in the cell B15 right here. For my EPS shortfall, I'm going to use max function in Excel, finding the maximum between the difference between acquired EPS and pro forma EPS and 0. Now we can see that EPS shortfall is 0.02. Perfect. What is net income shortfall in this case scenario? I'm going to grab my EPS shortfall and I'm going to multiply it by pro forma shares outstanding. So my net income shortfall is 13.1. And now I'm going to calculate pre-tax synergies to achieve EPS neutrality by using the formula we discussed. So I'm going to take net income shortfall and divide it by 1 minus, and my tax rate is in the cell C13. Great job. My pre-tax synergies to achieve EPS neutrality would be 18.75. Let's calculate the same value using a second formula we discussed. So I'm going to use max function in Excel, and I'm going to find maximum between my acquired EPS minus my pro forma EPS multiplied by my pro forma shares outstanding divided by 1 minus my tax rate, comma, or 0. So maximum between this formula or 0 will be my pre-tax synergies to achieve EPS neutrality by using max formula in Excel. Enter, and you can see that I have the same result. My pre-tax synergies to achieve EPS neutrality would be 18.75. Great job, guys.